Hi everyone. Okay, let's have a look at the solution for Cougar Inc.'s income statement. Again, it's exercise 2 from page 78 in the textbook. On the After I did the last video, I did put in the notes that one area that might cause you a little bit of challenges, especially if you haven't done financial accounting 2, for Cougar's income statement, is the fact that they give gross revenue and sales discounts as two of the categories. So what we do is we put gross revenue, which means all of the sales that we had minus any discounts. So maybe for some reason, after we sold a customer, again, I'll use the spinach example. They brought the spinach back because the quality wasn't good. And maybe instead of the supplier taking the spinach back, they say, okay, well, if you use it in the next couple of days, it's still good. So why don't I give you a discount on the price? Okay, so they ended up giving discounts of $20,000. So therefore, their overall net revenue is $500,000. Another category that could be listed there, as opposed to, say, sales discounts, or in addition to sales discounts, would be sales returns. Okay, so gross revenue minus any sales discounts and minus any sales returns will give you the net revenue, or the actual sales that happened, sales dollars that happened during the year. By adding this extra information, it just gives different users of the financial statements more valuable information. So for example, VP of sales or the sales manager, they're not only just seeing the revenue number, they're seeing, okay, this was my overall sales or revenue, my gross. And then for some reason on top of that, we gave discounts and we had maybe a whole bunch of returns. Okay, so that's where you want to put those in. Okay, so interest income, that is another new item. Okay, so in this case, maybe they had investments and they earned interest. Okay, so interest revenue. So we want to keep that a little bit separate from the overall revenue that we had from selling, the main purpose of our company. So if we sold spinach, we don't want to bury that interest income number in with the net revenue for spinach. So we keep it separate so we can just see that. And then we've got our cost of goods sold. And then we've got our two sales. So our net revenue plus our interest income, and then subtract off the cost of goods sold. That gives us our gross profit of $206,000. Then from there, we've got all of our expenses, office salaries, sales salaries, advertising, so on and so forth, including depreciation. So depreciation expense, if you remember, depreciation is, say, for example, we have a vehicle and we think that the vehicle is going to last us 10 years. So we depreciate that vehicle over its useful life. So expense bits and pieces of it over that 10 years so that it shows that the asset isn't really worth as much as it was when we bought it. We've expensed part of it under depreciation expenses. Okay. Finance costs, that's just honestly another way of saying interest expense. Then we have income tax expense, and then we have our total expenses. So then our gross profit minus our total expenses gives us a profit, an overall profit or net income of $73,000. Okay, so there's a couple more new items. So again, there are going to be more and more items in this chapter that's new for you in creating income statements and in creating balance sheets. So I will be creating another video introducing you to the next section so that you can see again how our income statement is going to change to make it even more informative for our internal users of financial statements. Thanks, everyone.